Welcome to another episode of Millennial Investing Explained. Here's today's question. Yeah, and you mentioned rentals there, and I'm glad you did because that's something I actually wanted to bring up and get your viewpoint on, because what I did with my student loans, and one of the reasons why I haven't personally refinanced, is because I was able to find 2 investment properties that I was able to put down payments on as rentals, and those down payments, they were large, so they're not necessarily easy for everybody just graduating college to do, and I didn't just graduate college, so I've had some time to work up to it, but what I did was I took those down payments and I bought 2 rental properties, and that down payment was much less. It was about half of what my student loan balance is. And now those 2 rental properties cover my student loans plus some profit on top of that. So now I have my rentals that are paying off my student loans and giving me net income on top of that. And I had to pay less for that than my student loans. So ultimately, at the end of it, I'm going to have paid much less for my student loans than I actually borrowed, and my tenants are going to pay that off on top of, the additional profit I'm making. So what do you think of that strategy?
You're just showing what happens when someone's 10% yield on rentals beats a 4.9% yield on student loans, right? I think that you're kind of illustrating the point that investing at a young age is very important, and putting money into non-retirement vehicles is equally as important as putting it into retirement accounts. So that's a great lesson for anybody listening to this. Is I don't want somebody going off and putting a bunch of money in Bitcoin, like instead of paying down their student loans. Like, I believe it or not, have had somebody that did that and it worked out well for them, but it was luck, not skill. So go put your money in something that you're expecting to get a positive long-term return. And it's all about savings rate. That's the key, is if you're putting a lot of your money away into your future, into income producing assets and just growing your assets over time, it's going to work out great. You can save a lot of money if you have the right plan, don't get me wrong, but that's kind of one of the things that we like to stress, is we can translate anybody's student loans into what they want to do for their life.
Now I have to ask, did that individual who made money in Bitcoin, did they take that money out of Bitcoin before it crashed and put it into their student loans?
So I used to be a bond trader, right? So, I used to be really into just like the trends of things and just what the markets were kind of saying. And I made a lot of bad calls on Bitcoin. I mean, just because I don't think it's something that has a fundamental value. And so things that don't have a fundamental value, it's just, to me, don't impress me as investments. So I told him I didn't think it was a quality thing to invest in when it was only at 1,500. And obviously, from a price perspective, I was very wrong. But then I called him again when Bitcoin was at 20,000, and he had, I think, a lot of money in Bitcoin, like a lot, like a 7-figure amount. And I begged him to sell enough to just pay his loans off, at least do that for yourself. And he didn't. And now I think it's at like 8,000 or something, So it's just a classic kind of behavioral bias that when we win on something, we never want to diversify and take some of our poker chips off the table. We always think it's going to go to, if it went up this much, it's going to go up even more, right? It's just the classic sort of fear versus greed of investing that you have to watch out for.
Yeah, we actually just recently had behavioral finance expert Daniel Crosby on the show. So definitely go back and listen to that if you haven't already. But we talk about the psychological biases you have when investing, and specifically about Bitcoin. So definitely go check that out. That's all for this episode of Millennial Investing Explained. Be sure to follow me on Instagram, Twitter, and Facebook, or subscribe to our YouTube channel to get even more free content.